let's get into it. So last time we looked at the functional budget, isn't it?
Yeah.
So we were saying that basically, if you talk about functional budget, it means that every department within the organization prepare its budget. So finance department will prepare its own budget. HR department will prepare budgets. Selling and distribution department will prepare their budget for the year, what they want to achieve. Production department will also prepare budget on what they want to achieve. So the company will now come and put all these budgets together to have a budget for the company, which is what we call the master budget. So last time we looked at functional budget. We say that functional budget starts with sales. If you don't know how much quantity you are going to sell, you don't know when or what quantity you are going to produce. And production budget also determine the materials that you are going to buy, the number of labor hours that you are going to use. So we look at how to prepare sales budget, production budget, material usage budget, material purchase budget, labor hours budget, both in hours and also both in value. And we speak more about maybe fixed overhead budgets. That one it hasn't been anything. Let's look at the cost of business. All right. So today we are going to look at a situation where you see the budget that we looked at the last time, we assume that everything is going to be perfect in the production process. There won't be any loss and any other things, but that is not always the case. You can be producing and some of the materials will get damaged or will get spots. What do you have to do? What do you have to do? So that is what we are going to look at today. So let's look at this question. Let's look at this example. Let's look at this example. Okay. Assuming we are planning to produce or to sell, let's assume this is plant 1 and 2. So we are planning to sell 50,000 units in plant 1, 60,000 units in plant 2. And we are saying that, okay, at the end of every year, we have a closing stock of 5,000 for month 1, 10,000 for month 1, 15,000 for month 2. So at the end of the day, if you want to produce, how many quantities do you have to produce for month 1? For month 1. Month 1, how many quantities do you have to produce? You want to sell 50,000, and at the end of the day, we should have 10,000 left again. How many quantities do you have to produce?
60,000.
60,000. What of month 2?
75,000.
75,000.
Right. But here is the case, we are saying that in the process of production, we are making provision for a normal loss of 1,000 for product 1 and a normal loss of 5,000 for product 2. So if this is the case, how many quantities do we have to produce for month 1? So that we sell 50,000, we have a closing stock of this one, and there will be a normal loss of 1,000. How many quantities do we have?
I think
We have
61.
to add the loss value to the original amount.
So that will be
61,000.
61,000, isn't it?
Yes.
So that if you produce 61,000, 1,000 will be lost. We are going to sell 50,000 and now have a closing stock of what? 10,000. Let's count to month 2.
80,000.
We have to produce what? 80,000. So that we will sell 60,000, have 15,000 left, and 5,000 will go back, isn't it? All right. So the assumption over here is that if we should be giving only the sales value and then the closing stock value, it means that the 60,000 that we have mentioned first is not the actual level of production. There should be a normal loss of 1,000. So if you are saying that 50,000 plus the 10,000, which is 60,000, that is not the actual level of what? Production. That is the level after the normal loss. That is the level after the normal loss. If you count to 60 plus 15, that is not the actual level of production. That is the level after we have deducted the abnormal what? Loss. So what we normally do is that they won't give you these figures like 1,000 and 5,000. They will always give you percentage of the normal loss. they will always give you a percentage of the what? Of the normal loss. So they can say that they are expecting a normal loss of 10% at each level of production for the year. At each level of production for the year. So what will happen is that if we want to find our production, it will be sales, which is 50,000 plus the closing stock, isn't it?
Yeah.
Closing stock, which is what? 10,000. What will be the value? It will be what?
60,000.
60,000. But they are saying that there should be a normal loss of what? 10,000. So the 60,000 over here is the production level after the normal loss, isn't it?
Mm.
It means that the production over here is representing 90 what? It's representing 90 what? The 60,000 is representing what percentage of the production level? 90%. That is after the
90%.
normal loss, isn't it? The normal
Yes.
loss is 10%. So after you have deducted the normal loss, this is the production level now, which is what? 90%. So how then do we find the actual production level? If 90 is 60,000, 100 will be what? If 90%, which is 0.9, is 60,000, then 100%, which will be 1, will be equal to what? We don't know, isn't it? So what we normally do is that this will multiply 0.9 multiplied by x, 60 multiplied by this one. So it will be 60,000 divided by 0.9. What is the answer?
66,606.
So 66,600.
667.
Okay.
So 667.
Okay, I'm done. Okay, 66, 667, isn't it? Okay. So it means that what is the value of the normal loss now? The normal loss will be 6,667, isn't it?
Yeah.
Yes.
So what normally happens is that when you are given a normal loss, if you add your sales plus the closing stock minus even the opening stock, the value that you are going to get is the production level after the normal loss. So if the normal loss is 5%, it means that what you have gotten represent 95%. So if you want to know the
Yeah.
full 100%, then you divide that one by the 0.95. Are you okay? So let's take a question, then we move on. Let's take a question, then we move on. All right. Let's take a question. What? That will be question.
21.
Yes, question 21. Okay. Okay, who is reading for us? Messi, read for us. Messi, read for us.
Okay, I'm coming. So
Okay.
question 21. Yeah, 21. Eco Limited is a small manufacturing company producing two high-quality products called K and Lay. Both products use a raw material T into bracket, costing $30 per kg. In their $30.
Okay. So that means 1 kg is what? $30.
Yes.
Okay.
In their manufacture. The directors are reviewing the company's stock management policies for the forthcoming year as part of the annual budget preparation cycle. Due to the product specification, quality is an important factor, and a quality control inspection takes place immediately after the production cycle has ended. At this point, any inferior products are rejected, and only good production becomes available for sale. In addition to these losses, a certain quantity of waste is unavoidable from material T due to the cutting process for both products. The following forecast information has been extracted from departmental estimates for the year ending 31st December 2020. sales, finished goods, post-production rejection rate, material T usage, additional information. Usage of raw material T is expected to be at a constant rate over the period. 2. Annual cost of holding 1 unit of raw material in stock is 70% of the material cost. 3. The cost of placing order is $30 per order. 4. Eco Limited maintains a constant 1,000 kg of safety/buffer stock of material T, regardless of the quantity ordered each time. 5. Prepare operational budget for the year ending 31st December 2022 under the following headings. Into brackets, show your workings clearly. I. Production budget for products K and L in units. II. Purchases budget for material T into brackets in kg and value. B. Calculate the economic order quantity for material T.
Okay, the B is not for MA, it's for FM. MA, they are no more doing working capital management. So that is for FM, economic order quantity. So it's not for MA, it's not part of the MA syllabus. What I want us to do is the production laws and those kind of things. Okay, let's come here. So they are saying that the company produces 2 products, product K and L, isn't it? And these 2 products use one type of raw material, which is the material T. Are you okay? Okay. So the budgeted sales for the period is what? 23,000, isn't it? Finished goods stock increased by year end. So the closing stock are 275 and 185. Are you okay? All right. But they are saying that the post-production rejection rates for the finished goods is 2% for product K and 3% for product what? L. Are you okay? So it means that the 23,000 over here and the 275 over here, those are the goods that are what? That are being satisfied that they are of no fault. But 2% of the total production level are being declared what? Deferred or rejected. Are we okay? And 3% of the total production for that lay is also declared as what? Inferior or rejected. So the question is, what is the first thing that we have to do is that we have to find the production level after the rejection. So after rejection, what are the value of the goods left, or what are the quantity of the goods left? That is the first thing that we have to do. So we want to sell 23,000, isn't it? And at the end, we should have 275,000 goods left again. In all, what will be the total quantity of goods that we should have before we sell 23,000, and we are going to have 275 left again? What will be the quantity that we should have? We want to sell 23 and 275 left. What will be the quantity that we are going to have? So let's look at the production budget for product K. Production budget. Production budget. We have product K. Product K. So the first thing is for we to know the production budget, we first have to know what we want to produce. So what is the sales unit? The sales unit is what?
23,000.
Sales unit are what? 23,000 for.
We are written late.
Okay,
K is what?
that is K.
Page 23.
Okay. K is what?
10,000.
Is 10,000.
Yes.
Okay. So this is if all things be equal, if we want to sell 23,000 and there is no loss, there is no closing stock, it means that we have to produce 23,000 and 10,000, isn't it? All right. Right now we want to have a closing stock of, we want to have a closing stock of what? What are the closing stock?
275.
275 and
275 for,
187 respectively.
and 187 for what?
85, 185.
Okay. 185 for lay. So we want to sell 23,000 and still have 275 left. So how many units do we have to produce?
23,000.
23, 275.
23 to what? 75. And this will be 10,185, isn't it?
Yes.
If there is no loss, this should have been the actual production level, isn't it?
100%.
Okay. But right now they are saying that what is the question saying?
I saying 2% is rejected.
Okay. It means that these are the quantity of the goods left after the rejection, isn't it? These are the quantity of the goods left after the rejection. But the rejection goods are also part of the production. We produce them before, at the end of the day, we realize that no, they are not good.
Yeah.
Before we declare them. And after throwing them off, these are the level of the goods that are certified to be what? To be superior or to be good. Are you getting it? So if we have thrown the rejected goods away, which is what? 2% of the actual production level, it means that the remaining goods left represent what? 98%, isn't it?
Yes, please.
So 98% for this one, 98% for this, and how many percent for this one?
97.
97.
97. So the actual question is that what was the total goods produced? What is the total production level now? We just divide the ones there, which is a 23275, 10185 divided by this one, representative rate of this one. We change them to what? Decimal 0.98. So what are we getting? The actual production.
23,750.
23,750 for the K. What will be for lay?
$10,500.
10,500. So what is the quantity of the goods that were rejected for K? What unit of the goods were rejected for K? What was the rejection for K? What is the unit of the goods rejected for K? You get it? This is
475.
475. That is it. 475. It is the actual money, is the one that is this is the actual production level. But after the rejection, after taking the spoiled ones out, this is the one less. So it means that the spoiled ones should be the actual money, the ones less. This one will be what? The lay will be what?
It will be 315.
315.
315. Are we okay with that particular one?
Yes, please.
Okay. So if you want to buy the materials, are you going to buy the materials based on the actual production, or you buy the material based on the goods that you declare to be okay?
It will be based on production requirements.
Yes, you are going to, because you buy the raw material, you have to produce the goods before you declare them defects or inferior. You don't know that they will become inferior until you are done producing, isn't it?
Yeah.
So the production will be based on the total production level, which is the 23750 and 10500. Okay. So this is the production budget now. So the production budget, the actual production is now 23750, 10 these ones. Okay. So let's come to material budget. Let's come to direct material budget or material budget. Let's come to material budget or material usage budget. What is the question, please?
So
Yes.
Yeah, I said for the sake of avoidance of confusion.
Okay.
The actual you have used for the production.
Okay,
Well, we're talking about budget. It may
okay,
confuse us when we are revising. So just
okay,
say production requirements here.
okay. This will be the production level.
Yeah.
Okay, okay,
But
okay,
it will confuse us.
okay, okay,
Thank you.
okay. So let me make this one unit after rejection.
Mhm.
Okay, okay. Post rejection unit. Let me make it like that.
Yeah.
Post rejection unit, and let me make this one pre rejection unit.
Mhm.
Or this one could be the production level. Okay, okay.
Yeah.
So material purchase budget or okay, let's make it purchase material purchase budget. That's what the question is saying.
Linus,
Yes.
can you come again with how you had the 23,750?
You were not here, so listen to the audio.
I was here, but I wasn't understanding, so I wanted you to finish.
When did you join the class? Because I have 6 people before.
Yes, but I joined when you were teaching it. I joined when you even started writing it. You changed the Excel sheet and then you started.
Okay, is
So
because
I understood up to the post rejection.
okay,
And then
okay,
you got
okay.
this one.
So you see from the question that there will be a rejection of 2%. Have you
Yes.
seen from the question that there will be 2% rejection and 3% rejection, isn't it?
Yes.
So this one, you see the quantity that we have over here, the 23,000 and the 275. Those are the goods that we are tested to be what? To be effective, not to be rejected or to be approved.
Yeah.
Are you okay?
Yeah.
Mhm.
So
Okay.
it means that this is not the total unit of the goods produced. The total unit of the
Mhm.
goods are different, and 2% of the total unit are being rejected, isn't it?
Yes.
It means that this represents the 98% which was approved. If 2% were rejected, it means that 98% were what?
Approved.
Approved. So the 98% now is the 23,000 and the 275 left. Are you okay?
Okay.
So
Okay.
how do we find the 100%? What do we find the total goods produced, the total production level? Then the question is, if 98% is what? How much?
27.
23275, isn't it?
Yes.
100% will be what? We don't know, right?
Yes.
We don't know. So you just cross multiply. 98 will multiply this, and this will multiply 100. So you just use 100 times 23275 divided by 98. Are you okay?
Yes.
Okay.
Okay. I've gotten it.
Okay. So I can move on now.
Yes, please.
Okay. So let's
Thank
come here. Let's come to the production. Let's come to the material purchase budget. So the material purchase budget, you have to know the total unit you want to produce before we can know the quantity of material that we have to buy, isn't it? If you want to buy, you have to know the total quantity of the goods that you are going to produce. Am I correct?
Yeah.
So for
Yeah, you're right.
products K, what is the production? How many quantity are we planning to produce?
23,750.
Okay, that is 23,750. Don't go and use 23,375. That is the 98%. The production will be based on the 100%. We have to produce before some of the goods will be declared rejected or inferior. So we won't know until we produce. So the production will be based on the total unit that we want to produce. So for that lay is what?
10,500.
10,500. Do you have any closing stock for material?
They said there's some finished goods. It's only finished goods.
No, material T wastage. So you can see that there is a wastage for material too.
Yes.
Are you okay? there will be a wastage for material to 5% and 10%, isn't it? Okay. So what is the material usage? What is the material usage requirement now?
2 kg for A and 3 kg for
And take note of
B.
this one. Net of what?
Wastage.
Use
Net
wastage.
of what? Wastage. So it means that this represents what? 95%, isn't it?
Mm.
And this
Yes,
represents
yes.
90%, isn't it?
Yeah.
So another way of doing it is that you can gross it to 100%, gross this one to 100%. Then you now use it to multiply the production requirement, or you do it. You find the material usage before you gross it now. So I'll show you all the two. So
Hold on.
usage, net of what?
2 kg for
Okay.
A.
No.
Who is that?
When I'm going,
Denise,
that's it.
Net of wastage. Okay. So 2 kg, isn't it? And what is so that this one is how much? 3 kg, isn't it? Okay. So what will be the value? What will be the total material usage after the wastage? After the wastage, what will be the requirements? If one unit is 2 kg, 23750 units will be how much? What is the answer? Am I correct?
yeah, 47,500. Yeah,
47,500. This 47,500, is that the total material required? The 47,500, is that the total material required?
yes.
No, that is the material used
Yeah, you-
after the wastage. So this is the post usage. This is the post material usage. This is the post material usage. So, but they are saying that there should be, what is the wastage requirement for the first one, for product K?
5.
5. It means that the 47,500 represent what? How many percentage?
95.
95%. Are you okay? Represent
Mhm.
95%. And the last one represents what percent? Product A represent what?
90%.
90%. So if you want to get 100%, what do we do now?
So if 95 is equal to 47,500, 100 is equal to what?
Then we divide by 0.95, isn't it?
Yes.
Okay. So what will be the answer? What will be the answer? What did you get?
100 times 47,500 divided by 90.
What are you getting?
I had
50,000.
50,000 for the first one.
Okay. The second one is what?
33,158.
3315. Okay. 33,158.
Divided by-
Are you sure?
No, it's 35,000.
Yes, I'm getting 35,000. It's divided by 0. The person who mentioned that should check again.
Yeah, I'm checking. Divided by 35,000.
Okay. So are we okay now?
Yes.
Okay. Another way of doing this is like this. You can see that the 2 kilogram and then the 3 kilogram are declared to be what? Net of wastage, isn't it? It means that the 2%, the 2 kilogram represent 95 for product K, and 3 kilogram represent 90%. So if you want to gross it, you can gross the usage, the material usage per kilogram to the 100%. So you just divide the first one by 0.95, divide the 2 by the 0.95 and give me the answer. Two divided by 0.95.
2.11110.
Okay, just take all of that. Just take all of them. That's what you get, isn't it?
Yes.
Okay, use that
2.1.
answer to multiply all the 23750.
Okay.
Use all the answer.
50,000.
You are getting
50,000.
50,000, isn't it? Okay.
Yes.
Divide the 3 kilogram by 0.9 and see.
3.3333.
Use the whole answer to multiply the 10,500 and
500.
see.
35,000.
Okay, so another way of doing it is that you gross the usage per material first, then you just multiply the final answer by the usage, or you do all of them at once before you gross it. That is it. So this is basically what they're asking us to do. This is the question now. So what do we do? 1 unit is what? 1 kilogram is how much? They say we should do the material purchase budget for material T in kilogram and in what? Value. So the first one that we done, the 50,000 and 35,000 are all in what? In units. So if you want to do it in value, what do we do?
We'll
Multiply
multiply
by
the price.
rate per kg.
So the rate for a kg is what? 30. It's 30, isn't it? Costing 30 per kilogram. So you multiply all of them by 30, then that will give you. So this one, if you multiply this one by 30, what are you getting?
You get 1.5
Okay, let me just do it.
million.
Material purchase budget. On the other purchase budget in volume. In value. Value rather. In value rather. So that would be, let's do it for product K. And product what? Product K. Okay. So what is the material usage requirement? What is the material usage requirement? And for product K, what is the usage requirement?
50,000
50,000. This is 35,000, isn't it?
and 35,000.
So we do the rate per what? Kilogram. Rate per what?
Kilogram.
Okay. This will be 30. This will also be what? 30. These are all in dollars. So
1,500,000.
okay. So this is what they're asking us to do.
150.
This is what they're asking us to do. So if they say something about loss, if they say something about loss, you have to know that whatever quantity you are going to get is the net of what? The loss. It is a post injection what? Unit. So if you are selling 23,000 and you're having a closing stock of 5,000, it means that after some of the goods were rejected, those are the one declare what? Good. Are you okay? So if you are if you are declaring 2% as a loss, it means that those represent the 98% that are declared what good. So what is the total unit of the goods that you produce there? Then you try to gross to 100%. Are you okay? All right. The B part is not for MA, it's for FM. I picked this question from ICANN, Nigeria, Institute of Chartered Accountant, Nigeria. So for them, they do performance management where they do the economic order quantity and those things. But this is not part of, this was part of the syllabus, but now they shifted it to FM. So it's part of FM. Those doing FM, you do it under working capital management. Okay. Are we good to go?
Therefore,
Yes.
please, with this additional information, the
Okay.
fourth one, be relevant or not?
It's relevant to
For
the
the
economic order
maintenance-
quantity.
Okay, not here.
Okay. It's relevant to the economic order.
Is maybe a desired level of stock that is closing stock, so that would have incorporated it.
It's relevant. You see, economic order quantity, what you do is that if the square root of 2 times the annual demand times the ordering cost divided by the holding cost.
Yeah.
So the annual cost of holding unit of raw material is 70% of the material cost. So 17 of the 30 Ghana cedis. So these are all relating to the economic order quantity.
The quantity, okay.
Are you okay?
Yeah.
Okay. So I want us to look at what we call cash budget. Cash budget. Cash budget. Cash budget. I hope we can all prepare cash flow statement, isn't it?
Therefore, it is time consuming, very much time consuming.
Okay.
So if I go and work things, it will be the last thing.
It's because you are not moving fast.
It's not straightforward.
They are not asking you to do everything. Just be the one that you do and go. There are some of the items over there, you don't even need to do calculation for them again. You just have to take them and bring them there like that. So bring them like that and go and do your calculation. So the cash budget is just a projection of our cash receipts and our cash payment for a given period of time. It can be monthly. How much are we expecting to receive from people in cash? And how much are we expecting to pay in cash? That is a cash budget. That is a cash budget. So cash, if they talk about cash budget or cash flow, only items that involve what? Cash payment or cash received will be reported in your cash book. Let me just put it cash book. If you're having cash book and there is a depreciation, are you going to record a depreciation in the cash book? Did you pay cash for it?
No.
Or you receive cash for it? So for cash budget, we take only items that are what? That involve that involve cash payment or cash receipt. Are you okay? There is no way you send bad debt to what? Cash book, isn't it? There is no cash paid for it and there's no cash receipt. So for cash budget, we are talking about only items that involve what? Cash flow. Either it can be inflow, it can be what? Outflow. So if you buy something from someone on credit, there is no cash involved. Don't bring it to the cash budget. So cash budget is just a statement, just a projection of our cash receipts and our cash payment for a given period of time. It can be monthly, it can be every quarter or something. But if you talk about a cash budget, what normally happens is that the problem comes with how we receive money from our receivables. How do we receive money from our debtors? How do we pay our creditors? That is where the problem is. How do we go about it? Sometimes the question can tell you that there was a sales of 1 million. 20% of this were on cash basis. 20% of this were on what? Cash. We are cash sales. It means that what? 80% will be for what?
Credit
Come again. Credit sales.
Okay. 80% will be for credit sales. Are you okay? Then they will now give you how this 80% of the credit sales will be received. So they can say 10% of the credit sales is received in the amount of sales. So if you are selling in January, it means that 10% of the credit sales value will be received in what? January. Are you okay?
Yeah.
10% of the credit sales is received in the month of sales. It means that if you made a sales in January, you are going to receive 10% of how many? How much will be the 10%? This will be 200,000. 20% will be 200,000. Am I right? Car sales will be 200,000, isn't it? Car sales, 20% of the 1 million is
Yes,
not
that
okay.
is it.
And this will be 800,000, isn't it?
Yes. Yeah.
Okay. So they are saying that 10% of the credit sales is received in the month of what? Sales. It means that 80,000 out of the credit
80,000.
sales will be received in the what? In the month of sales. So
Month.
if we sell in January, so 10% is in the month of sales. 10% is in the month of sales. Is in the month of sales. In the month of sales. So it means that 10% of the credit sales. What is the value of the credit sales?
800.
800,000. So that means 10% of the 800,000 will be received in the month of what? Sales. So the month that you are making the sale, you are going to receive 10%. So you are going to receive 80,000 in the month if it is January. Are you okay? Okay. Then the question will say that 35% will be received in the month following the sales. So if you are selling in January, it means that 35% will be received in which month? February. And the remainder is received in 2 months after the sales. So if you sell in January, it means that the remainder, which is what?
March.
35% will be received in what? March.
March.
Are you okay? Okay, that is only the things that normally counts that you have to take note of. You have to take note of. You don't take time, you end up doing something. Another question can also be like this. There can be another question like this. I hope we are okay with the shadow. All right. Another. Yes.
If we go by this, the remainder will be 55 and not 35.
Okay.
Yeah.
Okay.
Unless if we were applying it on the original amount.
Okay. So let me make this one to be 40. Okay, the 80% is now be sharing. So this will be 50%. Okay, the 80% now become 100%. Sorry. Okay. All right. Thank you. Okay. So that is how it is going to be. And always we draw a schedule for it. You have to draw a schedule to know when you are going to receive this money, when you are going to receive this money. Another issue can also be like this. The question can also be like, the car sales attract 2% discount. The car sales attract 2% what? Discounts. If we are giving a discount of 2%, it means that we are not going to receive all the 20% as car sales again.
No.
So how many percent are we going to receive?
18%.
It will be 18%. So you net the discount against the percentage. You net the discounts against what? The percentage. Or they can also be that the people that paid in the amount of sales, they are going to enjoy what? 2% discounts. They are going to enjoy 2% discounts. They are going to enjoy 2% discounts. So you have to take note of that. And sometimes they can give you the ratio and they say the remainder will be written off as a bad debt. Bad debt, you're not going to receive any money for it. So you just leave it. Let's come to how we settle the credit test too. It's the same procedure that we are going to have. They also give you how it will be settled. 50% in the month of purchases and 40% in the following month. That is how we go about it. So we pick a question, then we do a proper schedule for the cash flow, the cash budget. We do a proper schedule for the cash budget. All right. I want us to finish the budget today. Next week we start standard costing and variance analysis. Standard costing and variance analysis. Okay. How do I get a simple question so that it will not worry my people before we move on to something else? Oh, how do I get
Question
it?
19 is there. How do I get?
No, question 19. I look at it. No, starting with question 19 first, my people will die. Because we have to prepare a production budget and other things before we move on.
Yeah.
So my people will die. Let me just go and look at a question where everything will be given to us. Then we do first before. This thing, Kathy will say that move from where? Where is she? She's not here. Kathy is not here. Okay. She will say move from simple to complex or something. She has a term that she has been using. Okay, can we solve this ICA question? For that one, you have to prepare some things again. Let's solve that one as the second question. Let's solve that as the second question. Or just get a simple budget question so that you do it and go. At least people will be happy that they have done the first one.
One simple and one complex.
Exactly.
Oh, is there anything called simple? Just face the reality. Of
Oh,
you.
things are simple.
We
Yes.
agree.
Yes. Yes. Okay, should I
It's
try
only
this one?
in heaven. It's only in heaven that you get simple.
Should I try this one? Will I try the question 8?
Bring it on.
Okay.
Hey, you should bring it on.
You can see people.
Hey.
I mean, we will all do it.
Well, you mean
Because
I
he's
can't do
looking
it?
for- No, he's looking for a simple question he's not getting. So definitely that
Yes.
means that whatever you bring is a mixture of simple and difficult.
So now
Baba,
you are
So I'm
going
saying that you should bring
specific.
it
Baba, they are saying that you're on hit for the question, pa. Is that true?
That you should put it on.
Okay. Hey, Austin, Charlie, well, let me finish. Okay, let me pick the question. I can't get any question, so I have to get a 5 or the 6. No, the 5 is another issue, so I will solve the 5 as the next question. And then okay, let me pick the 7. No, 7 is another wahala.
Let's take 8.
You see, all these questions are not IC questions. Some of them are ACC and FEMA questions. And some of them are also ICANN. I used to pick the questions from different things. Okay, let's come here. Question 8. As a senior management accountant of BBF fine.
What is the charger?
Of BBF Limited, you are preparing the budget for the 3 months ending 30th September 2020, and you are giving the following data. A, sales or projected sales. April is what? 31,500 and those things. All sales are on credit, and on average, 80% of the sales result in the customer paying in the amount of the sale, taking a 5% what? Discount, isn't it?
Yeah.
10% pay in the month following the sales, 8% in the second month following the sales, and 2% are proof what? Which is a bad debt. Are you okay? Okay, let's move on. Goods are purchased in anticipation of sales in the month preceding the sales. What is the meaning of this?
following the sales,
No.
like the month of sales.
No.
The month.
You can't sell before you buy. So the preceding over here can be forward or backward.
Okay.
But you have to think that before you sell, you produce, isn't it? So if you are going to sell in January, that means you have to buy in December.
Yeah.
Okay, because this is production. You can't, though, if you are going to sell in January, you have to buy in February, but you can't sell before you buy and produce. Are you okay? So the preceding over here is the before is someone you are in front of. Okay. The preceding over here is someone you are in front of, not someone that is in front of you. Are you okay? Okay, so this one, someone can take it like the month following the sales. No, you can't sell before you produce. So since you have to produce before you sell, we assume that you are buying a month before selling. Are you okay? Is that explanation clear?
Yes.
Okay. Sales are invoiced at cost plus what? 33.
1/3%.
Okay. So the rate given to us, is it a margin or markup?
Markup.
Once it's cost plus, that's markup.
That is markup, isn't it?
Yes.
So, but we are giving sales figures. Markup is applied on what?
On cost.
Profit.
Markup
So-
on cost.
So right now we
Exchange
are giving
margin.
sales figure. So we have to change the markup to what?
Margin.
Margin.
Margin. So if you are changing the markup to margin, what are we looking for? We are looking at cost of sales, isn't it?
Mm.
We know that cost of sales plus profit will give us the selling price.
Mm.
So, so what we are going to do is that we want to find the purchases. We assume that we produce all and sell all. There is no opening stock. There is no closing stock. So our cost of sales is the same as our purchases. Let's move on. Suppliers are paid 2 months after the receipt of the goods. So if you receive the goods in April, in what month are you going to be paid?
June.
June.
You pay in June, isn't it? If you receive in May, in what month are you going to pay?
July.
July.
That's what they are saying. Overheads are what? 7,500 per a month paid as incurred. So as soon as you incur it, you have to pay it in the month that you incur it. Are you okay?
Yes.
Okay. The overdraft as at 30th June 2020 was 4,650. So this one, they even give you the closing balance for July. They will even give you the closing balance for July. Sometimes you have to work the closing balance yourself. You have to do additional workings. We are going to pick a question and you see that you will do the workings yourself before you start the actual question. Okay. So the required prepare cash collection from the customers for April to what?
September.
September 2020. Are you okay?
Yes.
All right. So we are going to April to September. What are we going to do now? Okay. Okay. So let's count. So the first one is, okay, let me put it on a different sheet. Okay. The first example is A. The first requirement is A, right? A, which is what? Cash collection what?
Hello, ma.
For customers.
Okay, we can say cash collection schedule. So the A is cash collection. Okay, what month are we using? We are using April.
Yes.
April, May, what? June, eh?
June, July, August,
July.
September.
August. Oh, yeah. August and what?
September.
So this will all be in Ghana city, isn't it? Okay. So I will show you how we do this. The easiest way to do this. The easiest way to do this. Okay. The first one that you have to do is that what is the first percentage? All sales are on credit, and on average, 80% of the sale results in the customer paying in the month of sale, taking 5% what? Discount, isn't it?
Yes.
So at the end of the day, how much are you going to be receiving from the customer on a percentage basis?
Going to receive 98 of the credit sales, 98%.
No. All sales are on credit. 80 of the sales result in the customer paying in the month of the
Okay.
sale, taking
Okay.
5.
So that will be 98.
No. if 80% of the customers result in the cost, 80% of the sales result in the customer paying in the amount of sale, taking a 5% settlement discount.
Okay.
75.
You take what? 75, isn't it?
Yeah.
You take what?
75.
No, it's rather 93.
Are you sure?
How are you getting your 93?
Okay.
I thought you said in all, the total credit sales, how much will be collected, or only on the 80%?
Okay, I'm talking about only the 80%.
Uh-huh. It
Okay.
is 75%.
Okay. Okay. All sales are on credit on average 80% of the sales resulting in the customer paying in the amount of the sale, taking what? 5% what? Settlement what? Discounts. Okay. Someone can also say that it's not 75%. Someone can also say that it's not 75%. The discount will not be taken on all the sales. The discount will be taken on the portion that the customers are paying for. Should I come again?
Yes.
80% represent what? April. What is the value of the 80%? That's 80% times 31,500 is what?
$25,000.
25,200.
If you want to give the discount, would the discount be given on this or it will be given on all the 31,500?
It will be given
On the
on
25,200.
25,200.
The discount will be given on 25,200, isn't it?
Yes.
Okay. So find 5% of that. Let me see.
1260.
1260.
60.
Okay. 1260, isn't it? Okay.
Yes.
So that will be the discount given. So how much are you going to be collecting from them?
$2,3,940.
940.
Okay. Find your 75% on a 31 and see whether you are going to get the same answer. If you get it, then it will be a coincidence.
75 on what?
On the 31,500.
Okay.
23625.
625.
No. So some people will not pay on time. Only people who are paying on time will be given the discount on the amount that they're supposed to pay. Are you okay?
Yeah.
So if you want to do this, what you have to do is that find your 85% first, find your 80% first, then you now find your discount and subtract it.
Yeah.
Are you okay?
Yeah.
Or another way of doing this is that you find the 80%. If you find the 80%, what are you getting? You have gotten something like what? 31,500. You have gotten 25,200, isn't it?
5,200.
So
Yeah.
if you are giving 5% out, it means that you are going to receive what percentage?
95.
So you just multiply that by 95. What are you getting?
Get 23,940.
Okay, so the best way to do this is 80%. 80% times 95% of the month sales. Are you okay? You find 80% of the sales first, then you multiply the answer by 95%, which is net of what? 5% discounts. So for April is how much?
23,940.
23,940. And May is how much? May is 80% times that one. So 0.8 times 0.95 times the amount. 24,000.
18,240.
18,240. Are we all following?
Mhm.
18,240. Who is saying? Who is that?
Yeah, I'm lost though.
Who is that? Messi.
Yes.
So are you okay? You are okay. You are not okay with the discount, isn't it?
Yes, and why the 95%? That is where I got lost.
Okay, if you find 80% on the 31,500, how much are you getting?
25,200.
So if you are giving 5% out, it means that you are going to be receiving what? How many percent?
95%.
So just
Okay.
multiply that answer by 95. Are you okay now?
Yes, please.
I don't have to be saying who is not okay before you own up. A time will come, I won't say it again. Because I know that some people will not be okay and I won't say it. So you have to front me and say you are not okay so that we move on. Are you okay? All right.
No.
Okay. You're okay now, isn't it?
Yes, I am.
So if I should be you, what I will do is that I will just find 0.8 times 0.95. What's the rate? 0.76. So I'll just multiply all those figures by 0.76 and I will go.
Mm.
So if you multiply by 30,000, how much are you getting?
$24,000.
Are you sure?
Okay, we are multiplying by the next one.
Habakkuk, are you there?
Yes, I'm here.
Okay. MA is not difficult, but is this one is critical understanding. And the theory, you have to pass this exam. Okay, I'm here to send some things on the level 2. The level 2 is the theory that will make you pass the MA and then the FM. If you can see this calculation, if you are not careful, you can't think like that. You'll be multiplying by 75%. So it's the theory. The theory will take like 30 or 32 marks. Be on top of the theory and pass the exam. Okay. So July is how much?
29,640.
29,640. Okay. August is how much?
Twenty-seven 360.
27,360.
Yeah.
Okay. September is how much?
It's 31,920.
31,920. Okay, we are done with the 80%, isn't it? We are done with the 80%. The following one is what? 10% paid in the month following the sales, isn't it? So we now count the next one that you have to count with is the 10%. Count with the 10%. 10%. So there is no March, isn't it? We're supposed to receive the March own in what? April. But there is no March, isn't it? So April's own will be received. April's own will be received in when?
May.
And May's
May.
own will be received in what?
June.
June's own will be received in what?
July.
July's own will be received in what?
August.
And August in what?
September.
September in where?
October.
But we are not asked to prepare for October. Are you okay?
Mm,
So let's find 10% of the April sales. 10% of the April sales is what?
3,150.
3,150, which will be received in the following month, which is 3,150. Okay, let's find out of May. May will be in June.
2,400.
2,400.
And then 3,000.
3,000.
Yes.
Okay, July's own will be
39.
3,900.
Yes.
Okay, so August own
36.
3,600.
Yeah.
Okay, the next one will be 8%, isn't it?
Yeah.
8%. Forget about the bad debts. So you just forget about it. 8% will be in the second month following the sales. So April's will be received in when?
Oh, June.
April's will be received in when? Which ones?
June. It will receive in June.
So it means that March own will be received in May, but we don't have March, isn't it?
Yeah.
February's own will be received in April. We don't have February, so we leave this one empty, isn't it? But
Yeah.
April's own will be received in June. So what is it around the 8% of the April sales?
25-20.
25,
20.
20. May's own will be received in what?
July.
in July.
July.
Okay, and that will give us how much?
1920.
1920. Let me put 00 here so that it can be 1920. Which month will be received in August?
June.
June.
June. So 8% of the June is what?
2,400.
2,400. So July's will be received in what?
In
September.
September.
September. So let's move on. What will be that? 8% of that?
3120.
81 what?
3120.
3120. Are you okay?
3120.
3120 or 2120?
Yes, 3120.
Okay. Are you okay with this?
Yes.
The 2% we cannot do anything again. It's a bad debt. We can't collect it, so we forget about it. So let's add all of them up.
So what is it?
Okay. Are we okay with this side?
Yeah.
Okay. Can we go to the second part? The cash budget is always about this collection and those kind of things. Are you okay? All right. Let's count to the second part. The second part is saying that prepare disbursement for purchases scheduled for April to what?
September.
Okay, so let's count to April schedule. So let's count to cash disbursement schedule. Cash disbursement. Disbursement is cash disbursement schedule. Cash disbursement schedule. Okay. So cash disbursement schedule it just means payment to our suppliers, isn't it? But we are not giving purchases in the question, but we are giving information on how to calculate the purchases, isn't it?
Mm,
For Ebeko.
Can we move on? Can we move on? Baba, can we move on?
Yes, sir.
Okay. We are not giving purchases, but we are giving information on how to calculate the purchases, isn't it? Okay.
yes.
We are not giving any information on closing stock, opening stock. So we assume that all purchases are our purchases is the same as the cost of sales. So what we
Cost
purchase
of
is what we are
sales.
selling. Are you okay? But how do we calculate cost of sales? It's sales minus gross profit, isn't it?
Yes, please.
Okay. Goods are purchased in anticipation of sales in the month preceding the sale. Sales are invoiced at cost price 33 1 and 1 33 whole number 1/3%. So this is what markup, but we are giving sales value. So what we have to do is we change it to what? Margin.
Margin.
So if you are changing this to margin, what will be the answer?
25%.
It will be 25 what?
Percent.
25%, right?
Yeah.
If 25%, someone want to say something.
I was asking how it got, how did he change it? He should teach me that how to change it.
Do you know how to change it?
33 1 raised to the power 1 whole number over 3. When you change it, it will be 1/3. And changing from markup to margin, you add the numerator to the denominator. So the numerator is 1. So the thing will be 1/3 plus 1, giving you 1/4. And 1/4 times 100 is 25%. That's why.
Oh, okay.
Okay, and let me show you another method. You see, markup should always be more than the margin.
Yeah, 33.33.
Markup should always be more than margin. Markup should
Mhm.
always be more than the margin.
Mhm.
Are you okay? So if you are changing, you either add or subtract. You either add the numerator to the denominator or you subtract. So if you're having 33 whole number 1/3, that is the same as 100 over 300%. 100 over 300 what? Percent. 33
Okay.
times 3 is 99 plus 1 is 100 over 300%. Are you okay?
Mhm.
Okay.
Yes.
Do 100 over 300% on your calculator and see what you are going to get.
Okay, about 300%.
What are you getting?
33.33.
So do
33.
this thing. Do SD. Press the SD and see what fraction are you going to get.
Make
1/3.
1/3. If you press the SD on the calculator, what are you getting? Have you pressed the SD on the calculator?
It's 100 over 3 you press, it will be 33.33 or
It's the
33.
same as the 100 over 33, isn't it?
Yeah,
Let's change it.
33.
Let's change it manually. Okay. 100 over 3% is the same as 100 over 3 divided by 100. Percentage is over 100, isn't it?
Yes, please.
Okay. So do that one again. 100 over 3 divided by 100. What are you getting?
3 divided by 100. 100 over 3. Divided by 3.
0.3333.
Press the SD on the calculator. You should be getting 1/3.
Yeah,
If you press the SD on the calculator, what are you getting? 1/3.
yeah, 1/3.
All the people who are doing the thing, they don't know where the SD is.
To be honest, it's true. I don't know where the SD is. So
Who is having a calculator there? The person can direct it.
Yeah, you check. It's under course. You know, we have sign, course, time. The SD is under the course. Or at the top of the, we have deal and AC. At the top of the deal and AC, we have SD.
mine has the shift and the alpha. Then I come to the solve issue. I don't know, maybe yours.
No.
Okay, you
Count to the
side.
right side, the right side of the calculator.
okay. Then the
Where the
mode and
delete,
then
where the delete and those things,
Where the
you see the
Yes,
top there, you
yes.
see SD there.
Oh, okay. Yes, I've seen it.
So press the SD.
1/3.
Okay. So that is 1/3, isn't it?
Yes.
But we are
please.
saying that if you are changing from markup to margin or margin to markup, if either you add or subtract, isn't it?
Yes.
And now we have markup, which is 1/3. So
Mm,
if you are subtracting the numerator from the denominator, it will be 1/2, which is 50%. Margin should not be higher than a markup.
okay.
So if you're adding, that will give you 1/4. So that will give you
Yeah.
25%. Then you are correct. Because markup
Okay.
should be higher than the margin. Are you okay?
Yes, please.
Okay. So if profit is 25%, cost will be what?
Mm.
If profit is 25%, cost will be what? Do you know the margin is the profit?
80%.
Do you know the margin is the profit?
Yeah.
Mm.
Profit is 25%. So how much will be the cost? What percentage will be the
75.
cost?
75.
It will be 75. Are you okay?
Yes.
Okay. So the 75% of all the monthly sales is the purchases, is the purchases price. Is the purchases price. Okay. So if you count to April, 75% of the April is the purchases, 75% of May is purchases, June is 75 is purchases like that. They are all purchases. How are we paying the suppliers? Suppliers are paid,
2 months after the receipt of the
Receipt of goods.
and we receive the goods 1 month before the sale, isn't it?
Yes.
So it means that if that is the case, if February's money will be paid in which month?
April.
In
April.
July.
In
March.
February's money will be paid in what?
April.
April's, May.
No.
It's
We are
2
receiving-
months. So it is
We are receiving the
March.
Let's
money,
get the
we are receiving the
question right.
goods. April, February's,
April.
okay, February's money will be paid in which month?
April.
No.
March.
It will
It will be
be
paid in March. February's goods will be received in January.
Yes.
February's goods will be received in January, isn't it? So from January, it will be March.
yes.
Are you okay now? We are receiving the goods 1 month in arrears. So
Yes, sir.
April's goods will be received in what? March.
March.
Which will be paid in which month?
April.
No,
May.
you'll be paying in May. Are you getting it?
Yes.
Should I take that one again?
Yes,
Yes,
please.
sir.
Okay. April's goods will be received in a month before the sale. What was the sale made? April. So if you want to receive the goods before the sale, it means that the goods will be received in March.
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 Yeah.
So you are going to pay them 2 months time. So that will be April and
Okay.
May. So the money will be paid in what? May.
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 Are you okay?
May.
May's goods will be received in April. The money will be paid in what? June. Are you okay?
June.
June goods will be received in May. The money will be paid in what? July.
July.
Are you
Okay.
okay? Okay. So let's move on. So the goods are 75% of the sales. Purchases is 75% of sales. So April we're supposed to receive March money in April, but there is no March. Are you okay? So that will be 0. But in May, which month's money are we going to receive?
March.
No.
So we can't hear you.
I'm saying that in May, which month money are we going to receive? Which month? In May.
April.
May.
April.
April's goods will be received in which month?
March.
So from March to which month is 2 months?
May.
May. So April's goods will not be received in April. If it should be received in April, it means that we pay in June. But we are receiving the goods 1 month in arrears. So April's goods will be received in March. So
Yes.
from March to May, we pay the April money. Are you okay?
Yes.
Don't go and confuse anything. Let's move on. So what will be the amount there? 75% of that one is what? 75%
That month is not.
is what?
That month is not enough.
Is 75% of the sales is what? For April,
23625.
3223.
2, 3.
625.
Okay. 75% of the May's money will be received in what? June, isn't it?
Yes.
Yeah.
Okay, let's move on.
18,000.
18,000. And 75% will be of June's money will be received in July, isn't it?
Yes.
Okay,
Yes.
let's move on. Joyce, are you okay now?
500.
Yes.
Okay.
500.
Okay.
About what?
The percentage, I still don't get how you get the 1/4, the 25 that you were saying.
Oh, but you press the thing on the calculator and say you should press SD.
Yeah, I didn't press, so I was using my calculator. No, it has gone off.
Then you have to buy a new. That is the opportunity for me to introduce a calculator to you.
Say, I bought this calculator not long ago, and it has disappointed me.
No, it means
I
that
bought
you have. Is
bought
it
it.
working again?
It's not working. It just went off now. No.
So I have to change the
I've
battery
been
for
hitting
you.
it on my palm.
Where are you? Where are you?
I'm around La Paz.
Okay, La Paz there, I can bring it to you. I will come and change the battery for you if it is not still not working. Then I'll send a new one to you.
Okay, agreed.
Okay. But before that, I'll take my FM money before you buy the calculator.
No problem.
No, this FM money cry, if I want to calculate time value of money on it, I should have increased the money now by this time. But because you want to give me your sister, I will just maintain a figure like that. Okay. So June's money will be I will show that one again, don't worry.
Okay.
Okay. June's money will be received in which month?
July.
July. Okay, that will give us how much?
22,500.
22,500. Are you okay? July's money,
29,
August. 29,
29250.
29250. Okay. August or in September.
37,000.
37.
27.
20.
Okay. 27. Are you okay? All right. So what again? This is the schedule that they are talking about. That is the schedule. The trade is very schedule for April to September. Sometimes the question can also say that 60% of the purchases are paid in the month of purchases. So it means that if that is paid in the month of purchases, it means that 50% of June's money will be paid in what? May, isn't it?
May.
60% of June's money. Okay, let me take it from May. If 50% is paid in the month of purchases, it means that 50% of May's money will be paid in what? April, isn't it? Because we are receiving the goods in April. We are receiving May's goods in April. And they are saying that 60% of the goods is 60% of the purchases is paid in the month of purchases. So since we are purchasing the May's goods in April, we are going to pay the 60% in the April. Are you okay? Okay.
Yes.
So if you have situations like that, just think through. It's not difficult. Just think through. This is what they are asking us to do. This is what they are asking us to do. Okay. Let's come to the cash budget now. They say we should prepare the cash budget from where? For the 3 months to September. So if they say for the 3 months to September, where are we starting from?
July,
July.
August.
Okay, July, August, September. Okay. So let's come to the cash budget. Cash budget for the 3 months.
Please, info.
Yes.
I think we have just done schedule for receipts of goods, but not payment.
That is a payment. We assume that you are paying all. Or there's issue about the payment too.
Yes, because the receipt is 1 month in anticipation.
Okay, so if you receive the goods, you pay 2 months
payment is made 2 months
after the receipt of the goods.
Exactly.
That is what we have done. It's the same thing that we have done. So this April's goods will be received in what? March. Baba, are you there?
Yeah,
April's goods will be received in March, isn't it?
yeah,
And the money will be paid 2 months from March, isn't it?
yeah.
Which will be in May. Are you okay?
What if I get it clearly?
Okay.
It stands that let's just on the face of the pin sheet,
Okay.
the purchases for May
Yes.
will be receipted in April.
Yes. I will
And
be paid
then
2
the
months from
purchases-
that date. And to be paid 2 months from that date. So 2 months will be in June.
Exactly.
2 months will be
Yeah.
in June. Okay.
And not May. So in May, we will not get payment.
May we get them April's payments.
Because we don't. 2 months after.
So April's goods will be received from in which month?
In March.
And payment will be done 2 months from March.
Okay.
2 months from March is when?
Okay. Yeah, it will be May.
it will be May. So if you find 75% of the April sales, you get this one.
Yeah, I get.
You have gotten it now.
I thought at the start we were doing the receipts
Okay.
of the goods.
No. So this one, you can only, if we should have closing stock and opening stock, then you have to adjust the cost of sales to know the purchases.
Okay.
But since there's no opening and closing stock, we
Open
assume
and
that all the
close.
goods purchased were all the goods sold. Okay.
Or where they approximate
Yes.
opening and closing.
Yes. Then we now
If they are
adjust the cost
similar,
of sales.
the net effect is the same.
Yeah. So we now adjust, if you have closing stock and opening stock, how do we get cost of sale? It is opening stock plus purchases minus closing stock. Then you find your purchases now, and you apportion
I'm
the
talking
purchase.
from the point that where the two are equivalent, opening and closing.
Okay. Then at the end of the day, they are going to have the same effect.
Yeah.
So we just leave them like that and take the cost of sales. Okay.
Okay.
Cash budget for. So if you are solving the question, don't be thinking about the one that I've solved for you in the classroom. I can't solve all the questions are plenty. I can't solve all of them for you. And up to now, none of you, like, it's only just Joycelyn who called me the last time that she was solving the first question on budgets. And some people I know over here, they can't solve that question, but they don't try it and they don't call me too. And the questions are plenty there. Are you telling me that you know the answers to all those questions? Oh, my people. Ayo. Let's move on. So we have July, August, and what? September. Okay, we have so many ways of preparing these budgets. I normally bring the opening balance first. Some people, they can also bring the opening balance at the end. It doesn't have any problem. So I will show the one that you show the opening balance at the closing so that we all be at the same side. I'm normally bring the opening balance first, but some people will bring it at the closing. Okay, let's move on. Okay, so the first thing is we start from receipts, isn't it? Receipt from customers, the money that we are going to receive from the customers. So the schedule that we prepared, how much are we receiving from July? What is the total amount that we are receiving in July?
34,560.
Okay, pick all these figures for me so that I can copy them. I can just take them. Write all of them for me so that if I'm from that place, I can do something.
Done.
Okay, done.
Okay. So in July is how much?
34,560.
August is how much?
33,660.
33,660. September is how much?
38,640.
38,460. 640. Okay. Do you have, let's read the question. Either we have any other money that will be in receipts. Do you have any receipt again? Do you have any other receipts? Sometimes it can be dividend receipt, investment receipt, or something.
No.
But it's nothing like that. So the next thing will be payment, isn't it? Okay. The payment, how much are we paying in this one? How much are we paying? This one, someone can also, let me bring the receipt to the top. I bring the receipt to the top. Then I'll just put debtors here or receivables, debtors. Because we are going to receive, so this will be creditors. So that the cash budget will be plenty. Okay. The items inside will be plenty. So in July, how much are we paying?
22,500.
22,500. Okay. In July, we are paying 22,500. Okay. In August, how much are we paying?
29,250.
29,250. 29,250. September, how much are we paying?
27,000.
27,000. thousand.
Oh.
This one, cry filler, you can make it total receipts. You can make it
Mm.
total receipts. Let's just repeat them again. Okay, let's make it total receipts. Are we having any other payments that we are going to make from the question?
Yes.
Yeah, the overheads
Okay,
are paid a month.
As incurred.
as in care. So we have overheads. Overheads. It is 7,500 per every month, isn't it?
Yeah, a month. Yeah.
So in this month, there will be 7,500. 7,500. 7,500. 7,500. So what will be the total payment?
It's 30,000.
This is 30,000. So what is happening? Are we having surplus?
Yeah, for the first one,
The cash flow. Cash
that will be
inflow,
4,560.
net cash inflow. Net cash inflow. That will be that will be 4,000. This one. Are we on the same path? Are we on the same path? Am I correct? The net cash inflow is a total receipt minus the total payment. Are we good to go?
Yes.
Okay. So what will happen? What will happen now
So
is that
now the opening balance of cash.
the opening balance, because this is a cash movement for the year. So this is the cash for the year. This will now increase our opening balance. So we bring the opening balance. Balance go down. Balance go down. What is the opening balance for the person?
An overdraft of 4,650.
So the opening balance will be what for? This is the opening balance for July. This is closing balance for June, isn't it? Which will become opening balance for July. So
July.
Overdraft.
Yeah.
Overdraft will be negative, right?
Yes.
So 4,650.
50.
Okay. What will be the closing balance?
Dash.
Balance carry down.
8. Then 90.
Yeah, 90.
Negative or
90
positive?
negative. Negative.
Okay. And this will now become what? This balance will become what?
Opening balance
Opening
for
balance for
July,
August.
August.
So this will be 90, isn't it? Negative 90. Are you all following?
Yeah.
Okay. What will be the balance carry down? What will be the closing balance for
3180.
3180? Okay. That 3180 will become which balance?
Yeah, balance.
For
Opening
September.
balance for September.
So negative
For September.
31. Okay. What will be the balance? What will be the balance at the end? Are you okay? Are you okay now?
Yeah. Yeah.
Okay, this is how.
Therefore, at looking at the development pattern we saw, they'll
Okay.
ask you to advise management. So what should management have done? Looking at
Yeah, you should advise management on which of the months.
Looking at the picture, the overview that we have seen.
Okay.
So it will have been prudent in July, we take a facility.
You have to go and take loan.
Exactly, or overdraft, because the next month we will be able to be good.
But you have to know that the overdraft, you are going to pay interest on it.
Just 1 month.
Yeah, that will be just 1 month. But the advice that you can give to them is to look at their debtors collection period.
Okay, to adjust it.
Yeah, if they can make some of them cash sales. Because if 80% are paying in the month of sale, it means that they are paying at the end of the month.
Yeah.
The sales can be made at the beginning of the year. Why are you going to get the money to run your activities for the 31 days before they will pay you? So you can make some of them as cash sales. Are you getting this? As soon as they buy it, they pay. And you can also
Negotiate
try to
with the creditors. To spread it out instead of
there can also be a question that will ask you, why should you prepare a cash budget? That particular one is part of the slides. Read it. Benefit of cash budget. Okay. Benefit of cash budget. So basically, this is what they are asking us to do. Let's solve a question that then me too, I will just stop here. You two, you stop here. Then we all stop here. Okay. Why is that question? Let me go and look for that question and confuse you before. Since you can calculate the debtor schedule, the creditor schedule. Okay, there is a question, November 2021, which is an ICA question. Let me get that question for you and ask you to go and do it. Let me get a question over ICA 2021. What is the ICA 2021? What is the ICA 2021? Okay, question 15. Question 15. Okay, let me solve the one that I want to solve for you. If I have time, I will solve that one for you. Question 15. If I don't have time, then you solve it on your own. It's not difficult. If you follow what we did right now, you won't have any problem. We solved question 8, right? All right, let me go and look for that question. Okay, the question is here. Question 5. Who is reading? Because I want to confuse you. I don't want to read the question. Someone should read. Who is reading for us?
Yes.
Joyce, are you reading? I don't want you to get confused, so don't read. Messi, read.
JS has to purchase T-shirts and print them with a logo to commemorate a major international sporting event.
Okay.
So, the commemorative T-shirts will be sold for 10 cedis each, and sales are as follows: July, 9,000 T-shirts; August, 18,000 T-shirts; September, 22,500 T-shirts. On third of sales, 1/3 of sales will be for cash. The remainder will be on credit, and the customer paying 1 month, paying the month after sales.
That means 1 month. July will be paid in August, isn't it?
Yes.
Okay, let's move on.
Purchases. The T-shirts will cost 6 cedis each and will be purchased in the month prior to sale. It is expected that 10% of the T-shirts purchased will be damaged during the printing process and will not be suitable for sale. The supplier has offered credit.
So, Baba, have you identified where I want to convince you? If you are smart, you'll be able to identify where I want to convince you. Let's move on. I've seen one confusion here. Okay, let's move on.
To print the T-shirt with the logo of the sporting event will require the purchase of a machine costing 30,000. The machine will be bought at the start of the project and paid for in August. The machine will have a 5-year useful life, but no expected residual value. The machine will be used elsewhere in the business at the end of this project.
Okay.
Expenses. Expenses excluding advertising of 20,000 cedis per month will be incurred each month and paid in the month incurred. Advertising costs 5,000 per month will be incurred in each of the months July, August, and September, and will be paid 1 month in arrears.
Okay. So
Required
July's own will be paid in which month?
August,
August own will be paid in which month?
September,
September in which month?
in October.
Okay, let's move on. Required.
Required. Produce a cash budget for the project for each of the 3 months, July, August, and September. B. Explain why it is important for a business to prepare a cash budget. C. State 3 ways, other than borrowing, of approving a cash flow position of a business.
Okay. Okay. That is the question. Produce a cash budget. You can see that I ask you, there can be a question they will ask you prepare. Why should your company prepare a budget, isn't it? It is in the slide notes.
Yeah.
It is in the notes. So check that one out. My focus is there. So what are we going to do now? We need to prepare a sales budget, isn't it, first? To know the sales for each month before we send it to the cash budget, isn't it? So let me show something over here. Let me show the cash budget here. Okay. Cash budget, we are doing it for July, August, and September, right? So we have July, August, September. So we have receipts. We have the currency sign. We have the currency sign. We have the currency sign. So the receipt, we are going to have cash. I also have debtors. Okay. Let's move on now. Can I show something like cash budget? Can I show something like sales budget first? Let's do some small workings. Sales budget or sales. Let's just say sales. Okay, sales, I'll have. Let me put July here. July. July. August. And what? September. So how many units are we selling? What is the unit for July? And what is the rate? What is the unit for July? Someone should write all the units here so that if I move that to that 9,000, 18,000, 22,500. 9,000, 18,000,
500.
22,500. What is the rate per t-shirt?
10 cedis.
10 cedi. 10 cedi. 10 cedi. Okay. So what will be the total amount now? Total sales value? 90,000. 180,000. And this one will give out 225,000. Isn't it? Am I
Yeah.
correct there? The question says that 1/3 of the sales will be for what? 1/3 of the goods will be
Cash.
1/3 will be for cash. And what portion will be for credit? If 1/3 is for cash, what will be for the credit sales? 1/3 is for
2/3.
cash. It will be 2/3. 1/3, 2/3. So 1/3 is for cash. Let's find 1/3 of this. Cash sales. Let's find the cash sales. Cash sales is 1/3, which is 1/3. 1 divided by 3. 1/3 of 90,000 is what?
30,000.
30,000. 60,000 for this one, isn't it? 75,000 for this. Am I correct? Am I correct? Someone should check. So credit sales will not be,
Yes, yeah,
credit sales will be 60,000. This will be 180,000. And this will be 150,000. I hope I'm correct there.
Credit sales.
Yeah, credit sales will be
I think
60,000.
the August month of August.
I guess will be 120,000.
Yes.
Richard, is that you?
Yes.
You won't count to the FM class, but you'll be the first to go and watch the video. Ayo. I've taken note of you before. I'll just call and say that if you pass, they should fail you so that you can't pay my money and they'll pass you. Okay. Let's move on. Are we okay with that part? So let's go now. So our car sales will be in the month of sales, isn't it? Car sales is immediately. So car sales will be 60,000, 30,000 for this one, 60,000 for this, and 75,000 for what? This. Are you okay? Let's count to how the credit sales will be collected.
Okay.
So what are they saying about the credit sales? The one that will be on credit will be the customer paying the month after sale. So July will be for which month? Which month are we taking the July on?
August.
Okay, so we take 60,000 in this month, isn't it?
Yes.
And 120 will be collected in this month. They are asking us to do only July, August, September. So forget about that part. They are not asking you to do anything to October. Are you okay? Okay. So this one you can put dash here. If you are using your book, put dash there. But I'll put 0 there. So what will be the total receipt now?
30,000.
30,000.
30,000.
Am I correct?
Yes.
So what I'll have is payments. I'll have payment, isn't it? Okay. But the payment, how do we go about it? This is the question. Purchases. The t-shirt will cost six cedis each and will be purchased in the month prior to what?
How to sell.
What is the meaning?
It means that the goods were purchased in June,
Before they will be sold in what? July.
July,
August will be purchased in what?
July,
And September will be purchased.
in August.
Okay. So July's money will be paid in which month?
Yeah, no, we will pay them.
The supplier has offered 2 months what?
Okay,
Credits.
so July will be paid. July will be paid in August,
August will be paid in what?
October.
August goods will be received in which month?
July,
July to what month is 2 months?
September.
Ayo.
September.
Ayo. It is expected that 10% of the t-shirt purchase will be damaged during the printing process and will not be suitable for sale. So it means that the goods that we are selling are not the actual production. Are you getting it? The 9,000 t-shirts are not the actual what? Production. Are not the actual production. They are the ones left after 10% has been declared what? Damaged. Are you okay? Okay. The 9,000 which was for July are not the actual what? Production. They were not the actual goods produced. They were not the actual t-shirt purchased and produced. They were the one that left or that are declared good after 10% are being declared what? Damaged. Are you okay? Should I take that part again? 10% of the t-shirt purchase will be damaged during the printing what? Process. It means that those that come out, the 9,000 were not the actual production. The actual production was 9,000 plus 10% of the actual production, but the 10% was what? Declared to be what? Damaged. So these are the ones left. So the 9,000 over here represents which percentage?
90.
90%. So let me just come and do purchases. Let me do purchases. Shadow here. Purchases. And look at purchases budget here. Mercy and Joyce, I hope you get that understanding there. Okay.
Yeah.
We just did that. If you don't get it, it should be like maybe tomorrow before you forget, not today. We just did it. Don't forget it today. If you
Any
forget it,
pressure.
I will just die. Or it's good that you understand before you go and forget. Or if you understand before you go and forget, that is because me, they have tried my best for you to understand. Okay. So we start with sales, isn't it? We start with the sales unit. The sales unit are what? 9,000, 18,000, 22,000 what? 500. It means that these are the goods declare what? Good after 10% were damaged. So this represents 90%, isn't it? All of these represent 90%. All of these represent 90%. So if you want to get 100%, what do we do?
If more, let's divide.
100 over 90 times
100. That would be 9,000 divided by 0.9, isn't it?
Yes, please.
What are you getting?
100,000.
So this will be 100,000 units. This side will be what?
Okay.
18,000. Are you sure? Are you sure it's 100,000 or 10,000?
I got 10,000.
It's supposed to be
Okay.
10,000. She's thinking that it's 90,000. That will be 20,000, isn't it?
1,000. Yes, please.
22,500 is what?
25,000.
Okay, so these are the actual unit that we are going to purchase, isn't it?
Yes, please.
And 10% of them will be declared what? Bad. 9,000 will be sold. So the actual purchases is what? 10,000, 20,000, 25,000. How much is one t-shirt? How much is one?
6.
6. So if you multiply, what are you getting? What will be the cost? What will be the cost?
60,000.
60,000. This will be 120,000, isn't it?
Yes.
And this will be what?
150,000.
150,000. So July's money will be paid in which month?
Yes.
July's money will be paid in which month?
I think it will be in September.
No. The goods, read the question again, read the effort again. The goods are purchased prior to the month of sale. So July's goods will be received in June. So from June to August, that is 4 months. Richard, are you okay now? Read the question again.
No.
The
Where are
t-shirt
you
will cost
reading?
6 and will be purchased in the month prior to sale. In the month
Okay.
prior to sale.
Okay.
Are you okay?
Okay.
So
Yes.
the 60,000 will be paid in what? July, we are not going to have any amount. But July's money will be paid in August, which is 60,000, isn't it?
Yes.
Okay.
Okay.
August will be paid in what?
September.
September will be paid in October. We are not to do that. So we are done with the purchases part. Let's come to the capital investments. We are going to buy a machine costing 30,000. When will the money be paid? When will the money be paid? When will the money be paid?
So which one are we doing the expenses?
We are doing the capital investment. To print the t-shirt with the logo of the sporting event, we require the purchase of a machine costing 30,000. The machine will be bought at the start of the project and paid for in what? August. So we paid the 30,000 in August. We are okay with that one. Let's come to the expenses. Expenses excluding advertising of 20,000 per month will be incurred each month and paid in the month incurred. So all the expenses will be paid in the month incurred, isn't it?
Yes.
So we have expenses, which is how much? 20,000, right? For every month.
Yes.
20,000 for every month. So the next expenses will be advertising. 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 Let's read that about advertising there. Okay. Advertising cost of 5,000 per month will be incurred in each of the months for each of the month, July, August, and September. I will be paid 1 month in what? Arrears. So it means that in July we are not going to pay any amount. We are not going to pay, but July's money will be paid in August. August or will be paid in what? September. So let's look at the total payments. Let's look at the total payments now. Total payments will give us this. Let me just use the auto sum. Okay, so we come to the net cash flow. Net cash flow for the year. Net cash flow. What will be the net cash flow for July? It will be the total receipt minus the total payments. That will be what?
10,000.
10,000. Do you have any opening balance? Do you have any opening balance for July?
Unless we check the question.
That's
Mm.
so we put 0 here, isn't it?
Oh, yes.
Okay. This will be what? 5,000. The net cash will be 5,000. 120 minus 115. Okay, 195 minus 145, 50,000. Okay.
Mm.
Let's come here. So what will be the closing balance for? Closing balance for July is 10,000. And this will become opening balance for which ones?
August.
August. So closing balance for August will be what?
15,000.
And this will become
Opening for September.
opening for, okay.
And
So this
September will be
65,000. You see, sometimes the question can ask you to prepare this one on total basis. So you put a total here. The question can also ask you to show total. So you put for all the period total. So you show the total. So the total will just be you add all the sales for this month, which is this plus this plus this. Are you okay?
Yeah.
So let me do it. Let me do one so that you see. So with this plus this plus this plus this. So that is the total. Then I'll just drag it to this place. I'm okay. Then I'll also come here. I'll do total for this one. So total will be this plus this plus this. I'll also drag it. Okay. 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 So this will become this one. This will be 65,000, isn't it?
Yes.
The opening balance will still be okay. The opening balance, we don't do anything about them because they are
Yeah,
still
it's zero. It's
they're,
zero.
they're always going to be the same thing that will, you can see that all these things that are included over here are those that we are carrying out to this side. So they are all 65. Are you okay?
I think we only take the first opening balance.
Okay.
If,
Yes, you
for
only
instance,
take the
July had.
if you are taking total, you just take the opening balance for the total and add it to the total over there. Okay. All right. Are you okay? So this is how we do the total. But if you are not asked to prepare the total, you prepare it on the individual basis and show these figures. Are you okay? All right. So I've solved 2 questions. I've done well. This is cash budget. I told you the question.
So let's see the closing balance.
Okay, the closing balance is 65.
Therefore, I can't view it. It's below my view.
Okay.
Scroll up.
Can you see it now?
Yeah.
Okay.
So you see, if we had added all this together to put here, it will not agree.
Yes. So it's the closing the closing balance and the cash balance are already in the 10,000, 5,000. This one already. So we just take this one.
So
All right.
if July had a figure other than zero, that is what we have brought.
That is what we add to the closing balance there. The total balance. Okay. So I've tried. I've solved 2 questions with you on cash budgets. Let me screw the questions so that you go and try them on your own.
Okay.
Let me see some of the questions. Okay, question 6, we have solved that one. Question 7. Okay, if you can try the question 7, try it. I know that it's difficult, but try it. Try it. I know that it's difficult, but try it. Question 7. Okay. Question 10 is on functional budget. If you can try it. Question 13. If you can try the question 13. Okay, question 13, we solved it the last time. We solved it the last time, which is on flexible budget and functional budget. We solved that one. Okay, question 14, we solved that one too the last time. Question 15 is an ICA question, November 2021 budget. So if you can try that one too, I'll be very glad. We solved the question 17 too. If you can try question 19, yeah, that is also cash budget and income statement and something like that. Okay, sometimes they can also ask you to prepare a total budget which will involve profit or loss. It's the same idea that you use. You find your total direct material, your total direct labor cost, then you find your total sales, then you prepare your profit or loss statement. Sales minus cost of sales will give you your profit. So how do you find the cost of sales? It is the direct material cost plus direct labor. If you have any closing stock, you do all those things. I'll just go and look for a question and we do one on that one.
So for the BNC,
the B.
No, I think the C, I asked a question and you drew light to that. You know, the earlier one we solved, I asked, so what advice can you offer to management? So we're talking about extension of your credit period
Yeah.
and shortening of your collection period,
Yes.
and maybe going for a facility where these two options are not feasible.
Okay. Ask the question that we just saw, there's something like other than borrowing, what they should do to improve their cash position, isn't it?
Yeah.
Is that what you're talking about?
I said maybe in the case of where these ones still cannot solve the problem, maybe the option is to look for a facility.
Yes, even you can even if you have some surplus, you can even invest the surplus into short term. And get some this on it.
Yeah. To avoid adding cash sitting there.
So let me look at the question. The C part now. The C part is something. Okay, state 3 ways other than borrowing of improving the cash flow position of a business. So they can invest their surplus cash into what? Short-term investment. That is also another way of improving your cash flow position. If you're investing your surplus cash into short-term investment, it will give you some returns on it, which is going to increase your cash.
Yeah.
You can also, what you said, you can also try to bargain with the creditors to extend it. So it means that if you are extending it, it means that you're not going to be paying on time. So the cash that you use to pay them
to do other things.
You can also shorten your collection period. Are you okay? And you can also go, okay, they say other than borrowing. So borrowing, you can also go for long term. But since they say borrowing should not be part, don't mention the borrowing.
So also reduce the credit period we give to.
Yeah, you can also issue additional shares to. You can also issue additional shares for cash to your existing shareholders. It's also a way of improving your cash flow position. Or you can even lend it. You can even rent some of the idle assets
facilities
to people so that they'll be paying you rent tax. They'll be paying you rent tax. Or you can also dispose some of the assets that you realize they are not of any use to you. They are become surplus to requirement. You can even sell them. All right. So that is some of the ways of improving the cash flow position of the company. All right. Do you have any question?
No.
Okay.
It's the beginning of the question that I stepped out to pray. So if I go through the video.
I hope the videos are helping.
Yeah, they are helping us.
Okay.
Because we'll go through the questions as if we have not done it before. Then after that, then we'll compare what you will get.
You see, some of the questions, where I pick my questions from, there are plenty. I pick the questions from SIMA, ACCA, ICANN, Institute of Chartered Accountant, Pakistan. Like, I really put work into this particular thing. I'll be doing question bank. So I have a question bank. Yes. So I just pick the questions from that place and put them here. So you look at from this place, I will just say we are done with the budgets. Maybe revision time, we compile some of the important questions and solve them and go through them again. And that is all. So next week we look at standard costing and variance analysis. I will drop that notes on the page on Wednesday or Tuesday. So after that one, we are going to
so that we'll get enough time to get.
Okay. I will do that on Tuesday. Then